If you have ever wondered if you need to hire a financial planner to take care of your money over the course of your lifetime, an average person making $50,000, you will hand a stranger a financial planner over $1 million over the course of your life. And we're going to show you how the numbers. Uncle Paul's going to show you right now how to not do that. Don't waste your money. Don't get screwed. Put your money in your hands, and you will learn right now on the Everything Money channel how to do it. Damn it, let's go. Paul, why do viewers like yourself, not you, Paul, the viewer watching, why do viewers get financial planners, Paul?
Seth, let me ask you this question.
Please
why would you get a financial? Do you have a financial planner?
I do not.
Why not?
It's a great question. I've been told numerous times that I need one.
Who told you that?
People who have them.
Who are these people?
A lot of people. A lot of people have informed me that it's the best thing to do. They know what they're doing.
And why do they know what they're doing? Why do we think they know what they're doing?
Well, they're certified, Paul.
What does that mean?
And I have no idea what that means.
This is going to be a very good video, but it's going to be a great video in terms of like my constantly asking questions, because you've known me for a while now. We've rekindled our love since high school.
Yes.
And you've always noticed, I think, that I'm always asking the question about why. Because
it gets annoying at times because you're like, I want to make $1 zillion. And you're
but that's the
why?
reason why we talk with you, the viewer. We sit there and say, I want everybody, one of the things I want to teach is always ask why. Don't just assume that somebody says something and they're right.
So going back, I have been told, I'm guessing like a lot of our viewers out there, that there's no way that a normal human being could get into such a crazy topic as investing money. So I'd rather leave it into the hands of professionals. We see all the branding and commercials from Fidelity, Charles Schwab, and it's just like always people, very, very happy people with a financial advisor just hugging them, and they have a great, beautiful life. Yeah, and they're rich. They're always rich.
So just like every career, there are good people and bad people.
Yes.
There are smart people and not so smart people, right?
Mm-hmm.
I personally believe that the financial planning world tends to have a lot more not smart people.
You're kidding.
No, I do not. I'm not kidding. And this is going to make a lot of people mad.
Okay.
And the viewers, when you guys are watching, if you have a financial planner friend, you want to share this video and have them send me hate mail, by all means, go right ahead.
Please do. And
make your comments below, because I want to engage this conversation, because what we're going to do is I'm going to show you the math and show how it can cost you 7 figures in retirement by wasting your money on a financial planner.
Now, the argument, Paul, is, again, I've heard this multiple times as well. I do not, and you might be feeling this if you're watching, I do not have time to worry about my money.
All the more reason why you shouldn't have a financial planner.
And so it came down to me, I'm thinking to myself, we spend our whole lives. I tell this to my children a lot because kids don't understand the idea of a dollar, right? No one can when you're young.
Until you're taught it.
Yeah, but it's like every time I leave this home, I have to go make dollar bills and then hand them to someone else so that we can have our house, our car, survive, and buy food. And so I always marvel at the idea that people will go work so hard, tirelessly, fly all over the country, put their life and their family on a second burner to get all this money.
Yep, and then what do?
And then they hand it to someone they hardly know,
a stranger,
and hope that they make the right financial choices over the course of 40 years.
So my personal opinion is, first off, that's a great observation. And everybody out there is probably watching it saying, I have a financial planner, they're great, they're brilliant. Your financial planner can be a wonderful human being.
Yes.
I have friends who are financial planners who I think are very, very intelligent money-wise.
Mm-hmm.
But the idea that in order to do well in the markets, you need a financial planner is not only misguided, it's incorrect.
Mm-hmm.
Here is why. So one of the first things out there is, how do financial planners make money?
Enlighten me.
So financial planners can make money in 2 ways. One is straight commission. So it's commission 2 M's and 2 S's. I think so, right?
Looks good.
So most of the fly-by-night financial planners make money by selling you products. Things like mutual funds, right?
ETFs?
No, not ETFs, mutual funds. Now, they'll work for a company like Edward Jones or Raymond, some other company that'll have mutual funds, and they'll pay like a 5% commission. So what's happening here is they sell you $10,000 worth of mutual funds.
Okay.
They get $500.
Do I pay 10.5?
Oh yeah, you're out. You're immediately out $500.
No, I'm sorry. Do I pay 10.5 for the $10,000
No,
investment?
you pay $10,000 and you're out $500.
Oh, okay. So if
I believe so. Yes.
If I buy $10,000 worth of stocks,
Yes,
I'm really
that's what it
buying
is.
$9,500 worth of
Yes.
stocks. Okay.
Warren Buffett always says, be very wary. You should be very wary of anybody who's making a commission off your money. And the reason being, it's a cynical way to look at the world. I get that.
It is, yes.
But it's also a way to sit there and say, where is this person's incentive? Okay?
Uh-huh.
I avoid these at all costs. If I was anybody who's if I was out there doing it, avoid these at all costs. Here's why. Mutual funds. 82% of mutual funds do not beat the market on a year-to-year basis. So, in order to beat the market over a 10-year basis, what are the chances of that happening? If you want to do some math real quick,
oh God,
it's 0.18 to the power of 10. That's, literally minuscule. It's impossible. You're not going to beat the market. And the reason being is mutual funds have to chase the market. Because think about the market recently. The market's been very hot lately, right?
Yeah.
I've been trailing the market. I'm okay with that because it's only my money, my family's money.
What's trailing? I don't understand.
I haven't been doing as well as the market.
Oh, okay.
Because I'm a value investor. Mm-hmm. If I was a mutual fund operator and all of a sudden I'm losing to the market 3, 4, 5% a year, what are you going to do with your money?
I'll take my money elsewhere.
You're going to take your money elsewhere.
You stink.
So what's my job? My job is to chase the market. There's a reason why this doesn't work. Everybody who comes to me and goes like, oh, I have a financial planner. They do not beat the market. That's the thing. When I hear this stuff, I just laugh because I'm like, that is not the way it works. And you're going to be trailing the market the entire time while still paying commission. Mm-hmm. Okay? That's one major way in which the people make money.
Whether I buy or sell, they're making money.
They're making money either way. And that's fine. By the way, I'm not criticizing making money. What I'm criticizing is, what I'm sitting there asking you to do is go out there and figure out how they're making money. If they're making an initial 5% commission, are they going to care about you after the commission comes in? If you think your person's different, great. You might have the obscure 1 in 100 people who are different.
You said this to me about real estate, Paul. Your real estate agent is
Yes.
always the greatest person in the world when you're buying or selling a home, and then afterwards they do not call and check up and see how you're doing on your payments.
Yeah. And if all of a sudden if a deal goes great, they're going to take credit for it. If a deal goes poorly, they're going to be like, well, I wasn't the manager. Same thing here. If things go great, what are they going to do?
Praise
themselves. If things go poorly, what are they going to say?
It's the market's fault.
It's the market's fault.
Okay, keep going.
So that's one way in which they make money. The next way, which I actually prefer, is annual fee on assets.
Now, I've talked to some financial planners. In fact, I'm a wedding photographer, so I've photographed some financial planners' weddings, and they say it's pretty simple, 1%. Yeah, it's just 1% of...
The less money you have, it can go upwards of 2%, though.
Okay, so...
And the more money you have, it can go less than 1%, but you have to be like north of $3 or $4 or $5 million to get that.
1% doesn't sound that bad, Paul.
1% doesn't sound bad. It doesn't sound bad at all. 1% in itself is like, okay, well, but remember one thing. If the market, what's the historical average for the market going back to
9.9?
9.9. What is that? 9.9%. 1% of that is 10% of that gain.
Okay.
Okay? Now here's where I'm going to show it. So then my other option is this. Mm-hmm. What about an ETF? What are the fees on an ETF?
I have no idea. Tell me.
Roughly? So an ETF, so this is my other option here. An ETF is what I'm suggesting you do. 0.2%.
Oh.
And that's, Vanguard there's plenty of them that are way below that. And that's going to mimic the market.
So explain to our viewers what an ETF is if they're just getting into this.
ETF is an exchange traded fund. It's low cost. It tries to mimic a certain index. So you can buy SPY, which traces the S&P 500.
Uh-huh.
So basically, you're gonna almost match the S&P 500 every year. Mm-hmm. So, would you rather? Here's situation 1. This is the 1% fee. Would you rather pay 1% and not get 9.9%? You're not going to get that with a financial planner. Because remember, I told you they're trying to chase the market. Uh-huh. Or option 2 is ETF. 0.2%, and you're going to get the market.
Seems pretty obvious.
Seems pretty obvious. Now, let's put some math to it. I want to show you exactly how much this costs you in the long run, okay?
Uh-huh.
Here are some assumptions. Age, 25. You're going to retire at 65.
Okay.
Income, $50K a year
Sounds
to start.
Reasonable.
Right?
Mm-hmm.
Save 10%.
Okay.
I'm going to have you saving 10%.
Okay.
Okay? And Your ROI is the market. Return on investment is 9.9%. Okay. These are very reasonable assumptions. 40 years to retirement, $50,000 a year. I'm going to assume your income goes up by 4% a year.
Okay.
It'll probably go up by more, especially the more professional you are and have more degrees, et cetera. You're probably going to go up higher. But these are very reasonable assumptions, correct?
I would say so, yeah.
Okay. Here is how scary it gets, Seth.
Oh, boy.
Financial planner. At the end of 40 years.
Oh, my gosh, we're getting right to this now?
Yep, at the end of 40 years.
Before you say that.
Yes.
If you can take a moment while you're viewing right now on your phone, your tablet, your Nintendo Game Boy, smash that like button in the bottom right corner, pretty please, with sugar on top. We have been getting some amazing subscribers, so many comments, Paul. And really, from the bottom of our hearts, from Paul and I, we can't thank you enough for your following. I double dog dare you to share this with a friend who needs to hear this. And if they want to argue with Paul, they can comment below or email him directly. Yeah, go ahead, Paul. Keep going.
So the financial planner doesn't even make the market's return.
This is proven. You're going to get arguments on this, Paul.
I'm going to get arguments on it, and I'm just going to say to you, show me a full bull and bear market. I don't want to see the last 5 years. I want to see from the beginning of a bull to the end of a bear. Show me that full cycle. Show me the mutual funds and which ones beat. So let's assume they make 9% a year, and you pay 1%. Your 10% on $50,000 a year at the age of 65 ends up being $2.4 million.
Nice retirement.
Not bad, right?
Very good.
ETF. You ready for this scary number?
Oh, boy.
Remember, it's going to match the market, and you're going to pay less in fees.
And your advice to all normal people like myself is just invest in ETFs, right?
Yep. So you're going to get 9.9% minus 0.2% a year, right? You ready for this number? $3.8 million.
It's that simple?
It's that simple. Now, why do people have financial planners? Why do you guys out there want a financial planner? You want somebody to call when times get scary, right? You want somebody to put models in and put your number in models and say, hey, listen, this is what's going to happen. You're going to be really rich. And guess what? If it works out, they're going to get a big pat on the back. If it doesn't work out, hey, I can't control the market. I agree with them. They can't control the market.
Yes.
But that means when things are good, they can't take credit for it. And all your financial planners out there are probably taking credit for the recent bull market, in which I'd sit there and say, you know, the most common, and by the way, this isn't just for you guys. Even for multi-millionaires, and I know somebody who works in a billionaire's office, and they believe this mumbo jumbo. They believe you don't look at somebody's returns over a full, complete bull and bear market. They believe you only look at the most recent years, and it's absolutely asinine. And the lucky thing for you guys is, I'm not trying to be funny, you guys are at least having me show you how this is not reality. This is not the way it works. Guys, is it worth $1.4 million to your retirement?
$1.4 million you're paying to some stranger.
To some stranger to do what? To not even beat the market, not even match the market. I'm telling you to just match the market, pay 0.2% in fees, and be done with it. Why even try? Now, you guys out there want to pick your own stocks, which I love, and I love the fact that we're getting interaction.
Yes.
Keep interacting, but I don't think it should be the majority of your money. I think it should be like 10% of your money, 5 or 10%. Use that to pick your own stocks, do your own analysis, and pick your own stocks. But other than that, stick to your ETFs, guys. Stick to it. Why not? I did that for a long time when I was focusing on growing my real estate portfolio. I just put the money in ETFs. I didn't have the time to go in there and go buy individual stocks. Now I have the system better. So the same thing for you guys. Put all your money in ETFs. I don't get this. You want somebody to make you feel warm and fuzzy inside? Come to the Everything Money channel.
$1.4 million.
When things are bad in the stock market, which cycles will happen, death, taxes, and cycles, those are 3 guarantees in life. Come to our channel. We will show you guys how things will be better in the future. When things are bad, we're going to show you how things will be better. When things are good, we're going to advise you to exercise caution, right? This is $1.4 million on 50 grand a year in income, at the age of 25, increasing 4% a year to the age of 65.
It's like you're working your last decade just to hand it to the other guy.
You're basically working over 1/3 of your life for what? 1/3 of your life to get what? To get somebody to sit there and hold your hand when things are bad?
And you have less money.
And well, that's the whole point. You're giving them the money.
Yeah, you're giving them the money. Oh my gosh.
Even Warren Buffett talks about ETFs, guys. This isn't just some like random like make up BS thing.
So from a personal standpoint, if you're watching, I decided not to get a financial planner. I knew so little, so stupid. In my 20s, I spent all my money, Paul.
Well, you were also in grad school and you didn't have...
So at some point, I went in the credit card debt upwards of $10,000.
Oh, did you really? I didn't know that.
I did, yeah, and I sold all my Magic cards to pay it off.
Oh.
And I mean, the Magic cards probably put me in that debt. But I mean, like I said, I went through so I have 10 years of college, folks, if you're watching, a PhD. So I did not get a literal job until I was 30 years old. But so I was underwater for a long time. And I had the unique ability where I worked a job with a bunch of really old, sophisticated nerds, a science job, and they basically told me the same thing. You don't need to hire a financial planner.
They said that at the company?
Yes.
Oh, that's wonderful.
Yeah, they just said, just start learning. And so I go back. I don't mean to say it again. It just baffles my mind that people will leave the house to get all this money and then not take the, half hour a week, an hour a week to learn how to do some of this easy stuff. And it's as simple. Paul, I can change my entire portfolio right now on Fidelity.
Exactly.
I can just click literally a few buttons for free.
And we talk about Everything Money app, like it's an app we're going to create. One of the things I want everybody to remember is what we're trying to teach you isn't rocket science. It doesn't take a PhD in chemistry. It's actually a lot more basic than you think. Mm-hmm. But in the world of finance, we all assume. Look at it this way. Everybody watching here probably thinks I know what I'm doing. Guys, if you had money invested in me in the last 4 or 5 years, you would have fired me by now. Because I'd have been like, listen, this market doesn't make sense to me. And you'd been like, well, my neighbors are making all this money. You might think you're different. You're not different. You would have fired me by now. Mm-hmm. That's a big reason I don't want to give my exact all stock picks, because I want people to sit there and think independently.
Yes.
Here, you didn't have to think about it. You're just like, I'm just going to buy my ETFs. Whatever the market does, I do. If the market goes up a ton, I go up a ton. If the market goes down, I go down. But your goal is to dollar cost average, buy every single month the exact same ETFs.
Yep.
And over the long haul, you'll buy when it's high, you'll buy when it's low. And over the long haul, you'll buy when it's about right. That's the point of it all. It's not rocket science. If you want somebody, we live in the world of YouTube now. Everybody watching right now, you guys love YouTube. Go to YouTube to learn. You can go to YouTube to learn all this stuff. There's a lot of people out there saying, stocks are great, buy stocks. That's why I'm glad you're watching us, because we're going to tell you the reality. When stocks are up, we're like, hey, listen, be cautious. But I guarantee you guys, when stocks are down, I'll be one of the few people saying it's a good time to buy. In 2009, and I have the emails to prove it, my lawyers and financial guys at Merrill Lynch, I have my money there. They don't manage my money, though. I manage it all. They told me I was the only good phone call they had, because I was like, this is wonderful. Stocks are down. Buy a ton. And I have the emails to prove it. Everybody out there will sit there and say the same thing. Every time somebody said to me, I was like, I'd love to see that. Oh, I can't show you the proof. Why? It's private information. Well, you had no problem telling me. I have the emails to prove it. Mm-hmm. Listen, because I look at it, I'm programmed differently. Take this programming and realize this is the way to go. This is so much better. Nobody realizes how much money this is. In fact, I guarantee you, if you ask your financial planner, hey, if I gave them this situation, how much do you think it would change by retirement? They wouldn't come up with this number. And it's a simple Excel calculation. I just put it in Excel. This is the number that came out. So I'm looking at saying, guys, you're smarter than you think you are. Financial planning isn't as hard as you think it is. Mm-hmm. So do it for yourself. Just be disciplined. Come to the Everything Money channel, and we'll show you the discipline it takes to just keep going. You'll hear me talking about things, and you will do great without a financial planner. You don't need a financial planner at all.
For our viewers out there, I want to thank you one more time for watching. Make sure you smash that like button. If you haven't noticed, I'm a very normal person in this world. I know very little about investing and real estate, but I have my Uncle Paul here helping me
I love how people are calling
all along the way, and you have him too. And if we've mentioned before, if Paul gets hired for business consulting, he charges a lot of money, and you're getting it all for free. And all we ask is a simple like to help us out, and that'll get our viewers up, and it'll make us more money. All of us more money, including yourself.
And that way we can provide more and more things at low cost or free. We have exciting things coming up in the future. We're going to be doing more videos per week, more live streaming. We're developing this app to go over our... Well, we're not developing... Yeah, we're doing the plan right now to then start development in the next 3 to 6 months. An app to analyze stocks and... provide this financial advice. Just like sit there and say, like, guys, don't worry about this. Markets are great right now, and there'll be a time when everybody's just like, oh my God, markets keep going down. And Uncle Paul will be here saying, it will be fine. It'll be great, actually. Just your job is to save every single month. I know you have a financial planner. It's probably your cousin's husband or wife or something like that. Just maybe put some money aside that you don't even like show them. And I'll tell you right now that the hard part is over a long period of time, you got to watch it. You've got to sit there and look at the numbers over a long period of time. That's hard to do because everybody wants the instant gratification. I'm just telling you right now, it's been proven that mutual funds do not beat the market over long periods of time. It's been proven in so many studies. And at 82% that don't beat on a year-to-year basis, in order to beat over a 10-year basis, the numbers are
minuscule.
In a very, very small, low percentage, single digits.
Follow along the Everything channel with Seth and Paul. Thanks for watching.